This is episode 15 of 5 Minutes of Crypto. Alright, guys, welcome back to today's episode. Sorry about the sound quality. I don't actually have my recording equipment with me today, but I'll do my best to keep the sound as clear as possible. Alright, so for those of you that are new or that are just joining the channel, this is a channel that provides the top cryptocurrency news in under 5 minutes daily. Alright, so let's get started. Let's start by looking at the price of Bitcoin and Ethereum today. Bitcoin is currently sitting at $5,354.17. It's up 0.61% on the day. And as you guys can see, as I've been talking over the previous episodes, the uptrend of Bitcoin is continuing. The small trend line that's showing, this uptick. And that's over the past 7 days. You can see it's starting to grow. And as I said, once Bitcoin crosses $5,300 and holds there, so hopefully we can hold here, I think it'll start jumping closer to 6K. Ethereum is actually down 0.19% on the day, but it is at $174, so it's crossed that $172 mark it was at, I think, yesterday or the day before, and you can see the same trend continuing here in Ethereum. There's a small uptrend or uptick in the price. In the remaining top 10, we can see that Cardano is actually down the most today. It's down 2.21%, and you can see a smaller downtrend on this past 7-day chart. Okay, so guys, let's see what's making news in the cryptocurrency space. I'll start off with this article right here. This is by Cointelegraph.com, and it says the cryptocurrency bear market is waning and is going through an accumulation phase, says report. So the article here says that the cryptocurrency bear market is winding down and is in its final stage. And per the report, the accumulation phase is expected to bring Bitcoin to the trade in the quarter between $3,000 and $6,500, which is currently sitting at. And it suggests that Bitcoin whales are currently accumulating the leading cryptocurrency with echoes of the bear market from 2014 to 2015. So they're comparing it to the bear market that happened in 2014 and 2015, and they're saying that we're starting to follow that same trend where after that long bear market, like 1 or 2 years long, the smart money started accumulating Bitcoin and waiting for the next bull run to start. So if anything, this is showing that Bitcoin might jump to an even higher price than before. Alright, so continuing on with the article, it says that most retail traders have already left the current market, while agnostic traders and long-term investors have become dominant. This is a good thing for a bull market, because when you have these long-term investors, you have these, people that, believe the hype, believe the long-term growth and believe in the long-term growth of cryptocurrency. That's the people that are going to actually hold, even when the price jumps to 6K, when it jumps to 7K, when it jumps to 8K. These guys are the guys that'll believe it'll go higher, and they won't, sell out and take a quick profit. The guys that were going to take a quick profit were mostly these retail traders, which are probably already out of the scene. So it also shows that the recent Bitcoin 60-day volatility slumped below 5%, a level that's not been seen since late 2016. And again, that was when the bull run of the 2017 bull run actually started happening. In 2016 was the accumulation phase, and then in 2017 we saw those massive gains. Alright, so the rest of the article says 92% of this generation does not trust banks. So I think they're talking about millennials here. And they say that the majority of Bitcoin buyers are millennials. The researchers forecast that Bitcoin will see mass adoption in the coming 5 years, and this can be true, especially if the younger generation is starting to grow and accept digital currency as a way of payment. So it says cryptocurrency investing is mostly popular among millennials, earning from between $75,000 to $99,000 annually. Alright guys, so the next article that I actually have here, I want to get through it before I run out of time, is this one, which says a crypto developer raises $4 million from Samsung and others to launch wallet without private keys. So you guys all know that anyone that holds a cryptocurrency wallet, the biggest annoyance, the biggest, issue with setting it up for the general user is having to store that private key. So whenever I have to tell one of my family members, oh, here, set up a crypto wallet and start buying, Bitcoin or Ethereum or whatever in that wallet, the most annoying part is always having, myself to store their private key. They don't want to deal with the hassle of storing the private key or figuring out how the wallet works. So this wallet maker, I think their name is here. KZen is a developer, and the name of the wallet app is ZenGo. That they're saying that they found a way to combine a split key storage with biometric security features. That would, so I guess they would split the key in two. One part of the key would be stored with your biometric security, so probably fingerprint or some kind of retina scan, and well, that they'll come, reveal in detail later. But the company hopes that users will be able to benefit from a simple wallet user interface while not relying on a third party or themselves to hold their private keys. So the idea is very interesting. But the biggest thing here is that Samsung is actually backing this. So hopefully this amounts to something, and we'll see a wallet, and we'll see crypto become easier to use in general in the future. And it seems like Samsung is starting to become a big player in this area. So hopefully that translates to more adoption. All right, guys, so that's all I have for you today. I'll see you guys all tomorrow.